You're tuned in to the deep dive, and today we're going to really unpack the financial performance of Jio Financial Services Limited, you know, JFSL.
Yeah, for the fiscal year that just wrapped up, ending March 31st, 2025.
And we've got quite a bit of material to work with here.
We do. We're looking at their analyst presentation, the transcript from that call, which is always interesting, plus the official filings with BSE and NSE and their own performance review doc. So multiple layers.
Exactly. You get the high-level stuff, the nitty-gritty numbers, the strategy talk. It's all in there.
hmm
So our mission really is to pull out the most important bits, the most interesting insights from all of this. We want to give you a clear, concise picture of JFSL's year and where they seem to be heading, without drowning everyone in data.
Right. Cut through the noise.
Okay, let's dive in then. Where's a good place to start? Maybe the big picture first.
Yeah, I think looking at the overall consolidated performance for the full year makes sense. It gives us a framework before we dig into the individual businesses. Okay, sounds good. So consolidated highlights, what really jumps out first?
Well, the income growth from their core operations is pretty striking, up 101% year on year. That brings it to ARSIS 349 crore.
Wow, 101%. Okay, and what exactly falls under core business operations here?
So that's mainly the interest they're earning from Jio Finance Limited, that's their lending arm, and also from Jio Payments Bank.
Okay,
Plus, it includes fees and commission income from Jio Payment Solutions, Jio Insurance Broking, and again, the Payments Bank and Jio Finance. So basically, the money they're making from their main day-to-day activities.
got it. That kind of growth suggests, well, people are actually using their stuff, right? Good early traction.
Definitely. Shows some strong market acceptance for their initial products and that they're executing on their plan. It kind of puts them on the map in the NBFC space.
And they also mentioned a healthy pre-provisioning operating profit, PPIP,
Yeah.
1,594 crore for the year.
Yes.
Now, PPP, just to remind everyone, that's basically their operating profit before they set aside money for potential bad loans.
Yeah.
And before taxes,
Ah.
Exactly. It's a good measure of underlying operational efficiency. And this figure also includes income they got from investments and dividends.
So it strips out some of the noise and shows the core engine's power?
Precisely. It shows how profitable the operations are before worrying about potential loan defaults. Gives a clearer picture of that fundamental business strength.
Okay, so core business income is way up. Operating profitability looks solid. What about the total income for the whole group?
The total consolidated income climbed to Rs 2,079 crores. That's up from Rs 1,855 crores the year before.
Okay, a decent increase. How does that break down?
Well, interest income was a big piece, Rs 853 crores. And interestingly, Rs 167 crore of that came straight from JFL's loan book. Really shows that lending side is ramping up.
Right.
Then you had dividend income, quite substantial at Rs 241 crores, mostly from Reliance Industries shares held by their investment subsidiary, RIIHL.
Ah,
Fees and commission added another Rs, 155 crores. And there's a pretty big net gain, Rs 794 crores, from changes in the fair value of their investments. Things like money market funds, liquid mutual funds.
so a mix of operational income and investment gains making up that total.
Exactly. It's like a pie with different slices, lending interest, investment income, fees, all contributing.
Got it. Now, the bottom line, profit after tax. Did that see a similar jump?
Not quite as dramatic. The consolidated profit after tax increased slightly. It went to Rs 1,613 crores from Rs 1,605 crores.
Oh, interesting. So income was up, but profit was almost flat. Why is that?
It looks like higher expenses and maybe a smaller contribution from their associates and joint ventures sort of balanced out the income growth.
So costs are rising as they scale up, or maybe some investments aren't paying off as much yet.
Could be a bit of both. Definitely something to watch. Are these strategic costs for future growth, or are there some efficiency challenges creeping in?
Right. Okay, what about their overall financial health? How does the balance sheet look?
Looks very strong. As of March 31st, net worth was Rs 1.23 lakh crores, total assets at Rs 1.34 lakh crores.
Wow.
And a huge chunk of those assets, about Rs 1.1 lakh crores, is investments. They keep using the phrase well-capitalized and resilient.
Yeah, I saw that.
And, that really does give them a solid foundation to fund all this growth they're planning.
Definitely sounds like they have the financial muscle. And I saw something about a dividend, too.
Yes, the board recommended a dividend of 50 pays, Rs 0.50 per equity share. The face value is Rs 10.
Okay.
It's a signal, right? Shows a commitment to returning some value to shareholders, even as they're growing.
Makes sense. Okay, so that's the big picture, the consolidated view. Let's zoom in a bit now. The individual businesses driving this. Maybe start with the lending arm, Jio Finance Limited, JFL. The numbers there looked, well, huge.
They really are.
No.
JFL's assets under management, basically the total value of loans they manage, hit ours, 10,053 crore at the end of March.
10,000 crore from what?
Get this, it was only ours, 173 crore the year before.
No way.
Yes. And even compared to the previous quarter, it was up 139%. Massive sequential growth.
That's explosive growth. How are they managing that? Is the quality holding up?
That's the key question, isn't it? Rapid expansion always brings that risk. They talk about their product and distribution pillars, driving this, getting diverse products out there through digital and physical channels. But yeah, ensuring responsible lending amid that surge is crucial.
Where does this lending happening? Is it more retail loans or business loans?
It's a mix. On the retail side, they're lending to both prime customers, people with good credit, and near prime, maybe slightly riskier profiles.
Okay.
And then on the wholesale side, they're focused on lending to companies with high credit ratings. So playing in different segments.
What kinds of loans specifically?
Quite a range. For businesses, they've got vendor financing, working capital loans, term loans, factoring, basically helping with supply chains, operations, investments. For individuals, it's things like home loans, loans against property, loans against mutual funds, even loans against shares. Pretty comprehensive.
Trying to cover all the bases, it seems. Like a one-stop shop for borrowing.
Seems like it. From small personal stuff right up to big corporate financing.
And how are they reaching customers? Is it all digital or?
It's definitely multi-pronged, digital campaigns, obviously, but they've also set up physical offices in 10 Tier 1 cities.
Acknowledging the need for face-to-face sometimes.
Exactly. And crucially, they're tapping into the huge Jio Group ecosystem, all those existing customers.
That's the big advantage.
For sure. Plus, they're partnering externally with digital real estate platforms for home loans, wealth firms, and banks for loans against securities, and doing direct institutional sales, too.
Makes a lot of sense to leverage all those channels, and they raised some debt themselves recently.
Yeah, they closed a Rs 1,000 crore debt issue. They said it was at a very competitive rate, which shows they can access funding pretty efficiently to fuel that lending engine.
Okay, let's switch gears to banking. Jio Payments Bank Limited, JPBL. Customer numbers and deposits looked like they jumped significantly there, too.
They did indeed. Customer base tripled year on year, hitting 2.31 million.
Tripled. Wow.
And deposits that includes current accounts, savings, and wallet balances also tripled to Rs 295 crores. Shows strong adoption of their banking services.
And wasn't there some news about SBI's stake in JPBL?
Yes, that was interesting. JFSL signed an agreement to buy out SBI's remaining stake for Rs 105 crore. It still needs regulatory approval, though.
So they want full ownership. Why is that important?
They highlighted it as strategic for customer acquisition, engagement, and retention. Basically, having full control gives them more flexibility to integrate it tightly with everything else they're doing.
Right, makes it a wholly owned subsidiary. Could be a big step for their banking plans. What else is JPBL up to?
A big focus is expanding their business correspondent network, the BCs.
Yeah, the agents on the ground.
Exactly. That network grew about 6 times year on year, now over 13,000 BCs. That's key for reaching into underserved areas, offering basic banking services to more people.
What kind of services through the BCs?
Things like opening savings accounts, they have different types, including sweep and salary accounts, digital wallets, debit cards, physical and virtual, using Aadhaar for payments, AEPS, and domestic money transfer, sending money within India.
So really pushing financial inclusion through that network. Okay, next up. Jio Payment Solutions Ltd, JPSL. What's the story there?
Key development for them was getting the online payment aggregator license.
Right, that's a big deal in the payment space.
It is. It lets them offer a full suite of payment solutions for merchants and customers online, in-store, offline, remote payments, the works.
How are they competing in that crowded market? What's their distribution play?
It's quite diversified. For the really small merchants, they're using the Jio Harat phones, which is clever. And they have this Jio Sound Pay device.
The little speaker that announces UPI payments?
Yeah, audio alerts. Great for busy small shopkeepers. Then they have dedicated teams for bigger clients and, again, leveraging the group ecosystem for enterprise customers.
That Jio Sound Pay is a neat idea for that segment. Their focus?
Profitable growth. They explicitly mention focusing on unit-level profitability for their payment solutions.
Makes sense. Okay, how about insurance? Jio Insurance Broking Limited, JIBL.
They've been busy building partnerships tied up with 34 insurers now,
34. Okay.
and they're offering 61 direct-to-customer plans covering life, health, and motor insurance, making those core insurance types accessible.
And making it easier to buy.
That seems to be the goal. They're refining the customer journey, building out a digital do-it-yourself platform for managing insurance online.
Trying to simplify insurance, which many people would appreciate. Now, the big one lots of people are watching, the joint ventures with BlackRock. What's the latest there?
Significant progress. On the asset management side, they've got in-principle approval from SEBI to be co-sponsors of a mutual fund.
Okay, so the regulator's given a preliminary green light.
Right. And they've actually incorporated the companies, Jio BlackRock Asset Management Private Limited, and the trustee company. JFSL put in Rs 141 crore. BlackRock Singapore put in a smaller amount initially.
So the structure's in place. Ready to launch soon.
Almost. They're waiting for the final approval, but they say senior leadership is onboarded, the tech platform is nearly deployed, and they have their product, roadmap, and go-to-market strategy ready.
Sounds like they're just waiting for the final go-ahead. That geoscale plus BlackRock expertise could be disruptive.
Absolutely. Potentially bringing more sophisticated investment options to a much wider Indian audience than ever before. That's the promise, anyway.
What about the other BlackRock JVs, wealth management and broking?
Also moving forward, they've incorporated companies for those too. Jio BlackRock Investment Advisors and Jio BlackRock Broking.
Okay.
And they've filed the applications for the necessary licenses, the RIA license for advising, and the broking license. They mentioned they're actively recruiting senior leaders for those businesses right now.
So asset management looks closest, but wealth and broking are clearly in the pipeline.
Exactly. Asset management seems furthest along, but the others are definitely part of the plan.
This whole BlackRock partnership could really shake things up. Okay, stepping back again. JFSL talks about 5 key strategic pillars driving all this. Can you remind us what those are?
Sure. They are product distribution, technology, data intelligence, and people.
Right. Let's quickly touch on each. Product, what's the essence there?
It's about offering a diverse set of products covering those core financial needs. Borrowing, transacting or payments, investing, including things like digital gold and protection, which is insurance.
And delivering these how?
Primarily through the Jio Finance app, which sits inside the main MyJio app, and also their My Money personal finance tool.
And the app's getting traction?
Yeah, they said over 8 million monthly active users in March 2025. And they're already working on an enhanced version based on user feedback.
8 million MAU is substantial. Okay, pillar 2, distribution. We've touched on this, but what's the summary?
It's that dual approach. Digital first, with the apps and tools like JioSam Pay, but also building out that physical presence, the Tier 1 city offices, and crucially, JPBL's huge BC network for wider reach.
Right, covering both online and offline.
And always leveraging the group ecosystem for cross-selling and marketing.
Makes total sense. Pillar 3, technology. What's the philosophy?
Agile and scalable. They're big on open source for flexibility. They've put in end-to-end systems for lending in JFL. They're replatforming payments and aiming for a unified tech stack across the board.
In their buzzwords?
Fit for purpose, SaaS first. So using cloud-based software where possible, reliability and availability. And interestingly, zero ops.
Zero ops? What does that even mean? Highly automated.
Presumably. Minimal manual operational overhead. It's definitely ambitious, maybe aspirational, but signals a focus on extreme efficiency through tech. Be interesting to see how close they get.
Very ambitious indeed. Okay, pillar 4, data intelligence. This sounds key.
It absolutely is. They talk about building a robust infrastructure, pulling in data from everywhere, credit bureaus, account aggregators, alternative data, their own data.
All with consent and governance, presumably.
Yes, they emphasize a strong data governance framework. And they're using advanced analytics and AI on top of this.
To do what?
To gain strategic advantages, offering more relevant products, improving customer experience, spotting potential defaults early, boosting efficiency. Data seems central to their whole approach.
Right, using data to be smarter in everything they do. And the final pillar, people.
The strategy here seems to be hiring experienced leaders from traditional banks, nimble NBFCs, and fintechs, trying to get that blend of experience and agility.
Building the right culture.
Yeah, fostering an ownership mindset and a digital-first approach. They mentioned a lean talent pool, around 1,000 people across all entities, and proactively using gig workers and global talent too.
Lean and mean, blending experience with adaptability. Okay, we covered consolidated, we covered the segments and strategy. What about the standalone financials just for JFSL itself?
Right, looking just at the holding company, JFSL.
Yes.
Total income was up to Rs 839 crores in FY25 from Rs 639 crores in FY24. Important note there that FY25 number includes a Rs 235 crore dividend from RIHL that landed in Q2.
Ah, okay. Significant chunk from the investment arm. What about profit?
Standalone profit after tax also rose nicely to Rs 549 crore from Rs 383 crore the year before.
So healthy profit growth there too. And assets.
Standalone assets were Rs 25,096 crores, mostly investments, Rs 22,706 crores, and standalone net worth was Rs 24,985 crores. So even on its own, it's financially solid.
Got it. And expenses on a standalone basis also up.
Yes, they noted an increase mainly due to employee costs and other operational spending needed to scale things up. Pretty standard for a growth phase, investing in people and systems.
Makes sense. Okay, wrapping things up. Looking ahead, what's their stated ambition, their outlook?
The ambition is clear. They want to be one of India's leading financial services companies, measured by market share and returns.
Bold goal. And the strategy to get there.
It sounds like disciplined execution. Keep scaling the businesses. Fine-tune the product mix. Deliver great digital experiences, all within strong governance and compliance. They also stress transparency, responsibility, integrity.
And keeping an eye on the costs while growing.
Absolutely. Focus on cost levers, achieving profitable unit economics, strong risk management. That all came through.
The overall theme seems to be
Simple yet intelligent financial services.
all right.
Using data to get the right product to the right customer via the right channel at the right time.
And the BlackRock JVs are a big part of that future vision.
Definitely. They see it as bringing world-class investment solutions, really tapping into that trend of financialization of savings in India.
Okay, so that's a pretty comprehensive look. If you had to boil it down, what are the main takeaways from this deep dive into JFSL's FY25?
I'd say the key takeaway is just the sheer scale of growth across multiple business lines in FY25. It's clearly driven by launching products strategically, rapidly expanding distribution, and getting users onto their digital platform. They're building on a very strong foundation, that big balance sheet, the focus on tech and data, and they have really clear, ambitious goals.
Was there one specific detail or trend that you found particularly intriguing or telling?
For me, it's the combination of that explosive AUM growth in JFL, the lending arm, and the tripling customer base in JPBL, the payments bank.
Yeah.
Plus, that move to take full ownership of JPBL,
Yeah.
it just screams aggressive growth plans in lending and banking. And then seeing the concrete steps with BlackRock really signals that their move into asset and wealth management isn't just talk, it feels imminent.
Definitely feels like they're moving fast on multiple fronts. So maybe a final thought for our listeners to ponder. Given all this, what are the potential long-term ripples? How could JFSL impact the wider Indian financial services landscape?
Yeah, exactly. How might their digital-first, data-heavy approach change how we all access financial products? And how will all these different pieces, lending, payments, banking, insurance, and investments, eventually fit together and interact?
Lots to think about regarding the future shape of finance in India. Well, thanks for digging into all that detail with us today.
My pleasure. It's certainly a company to watch.